Okay, we're working on part two. First thing to do is part E of two. Prepare the additional data needed for ratio computations in the input sheet. So open up your spreadsheet and go to the formula info and look and make sure that you have all this information. I'm not going to tell you which ones you don't have, but if you look at your input sheet here, there are certain items that are not listed. Certain items that are needed to do these ratios that are not already listed in these condensed balance sheet, income statement, and statement of cash flows. So you should list these items here. Next, compute the financial ratios and prepare the DuPont analysis of return on equity in the ratio output. Now, I don't have numbers in this spreadsheet, so I'm only going to demonstrate this kind of without numbers. So, for example, return on sales. I wonder why this is filled in. Return on sales equals net income divided by sales. So you would type in equals, go to your input sheet, net income for the current year divided by net sales revenue. And that's that. And you should always do these using formulas. You should never enter these using just typing in the numbers or working it out on a calculator. And do all of these ratios that are required of you here. You're going to do the two most recent years. And again, follow all of the instructions that are given to you here. Next, in the change column, choose the answer that best describes the change in the ratio. So over here, indicate if it's weaker or stronger, etc., quicker or slower, and all of the different changes for all of your different ratios. And then the last thing to do is your DuPont analysis. So your DuPont analysis should go over here. And what you can simply do is reference return on sales should come from here. Asset turnover should come from here. And so on and so forth to show that these are equal. We'll get to the industry in a moment. We're always using formulas to reference everything. For Part G, obtain industry average information and prepare the industry ratios. So to do this, you're going to need to go to money.msn.com. So here we go, we're at moneymsn.com. And enter the name or symbols box of your company. So in my case, I'm doing Walgreens. And there we go, there's Walgreens. Now go to fundamentals in the left side and look for key ratios right over here. Look for the name of the industry. Here you can see industry, pharmaceutical retailers. So type that into your spreadsheet. Industry name, pharmaceutical retailers. And then prepare the financial ratios, all of the different ratios. So for example, return on sales in this industry is, let's see, return on sales. Now, this is a little tricky because they use different terms. So if you look under profit margin, you'll see they have what they call net profit margin. That is the same as return on sales. The industry net profit margin is 3.67%. So over here under return on sales, you write 3.67 because return on sales is the same 0.0367, and this needs to be formatted obviously nicely like that. Return on assets would also be Let me find it here. There you go, return on assets. Return on equity is shown right here under investment returns. Accounts receivable turnover is under management efficiency. Receivable turnover, see, the terms are slightly different and it's a little confusing. Inventory turnover, right over here. Asset turnover, right here. Current ratio is under financial condition, right over here. Debt ratio, they give a different one, so don't worry about it. Same thing for free cash flow, they give a different one. But they do give you financial leverage. This would be leverage ratio over here. So they give you debt equity ratio, which is different from the debt ratio, believe it or not. Now input all of these over here and then reference them into your ratio output. So for example, here return on sales is equal to the information that I entered right over here. So this entire, when you're all done, this whole page should be all completed.